Hello traders, this is Dan Gibby, and in this Master Trader Weekly Trade Review, I'm going to show you one of my very favorite patterns called the Master Trader Bearish 1-2-3 continuation, and then I'm just going to add the concept of MTF, which we refer to as multiple time frame alignment. This is our approach to trading anything that moves in the financial markets. We put all of these concepts together, and that makes up the Master Trader Approach. We are technical-based pattern traders. No setup, no action, period. Then we take that picture of a compelling pattern and we put it in connection with the overall trend, up, down, or sideways, multiple time frame analysis, which I'm going to show you. Is on support or resistance? Is it showing relative strength or weakness? Any volume characteristics that help? What's the broader market doing? The sector, market internals? Once you do that, you simply manage the position in accordance with your trading plan. That's all trading is. This is the pattern I'm going to show you today. This is actually the bullish 1-2-3 continuation, but every one of our patterns just apply equally to the bearish side. Step one, I want a bullish wide range bar. What's a bullish wide range bar? It's a big fat green bar with little tails. End of story. Eyeball it. Then I want one or more inside bars that stay in the upper 1/3 of this bar's range. I'm going to show you in this example that we do have more than one inside bar, which took out the prior bar's high or low, and that's actually preferred. We call that a 1-2-3-4. It creates a little mini shakeout. And with all our patterns, we need what we call a price void, which means if it's a bullish one, you want insignificant resistance to the left. If it's a bearish one, like the one I'm going to show you, I want insignificant support to the left. We're going to buy over the high of the wide range bar and all the inside bars. The initial stop is under the low of the wide range bar. And I say until it gets altitude, until you get a closing breakout, until it's moving, then you can move it to the low of the inside bars. Then just, as I said, manage it per your trading plan. This was a trade that was in our advisory letter for subscribers last week. So we had a sideways trading range here. This is what we call an upside shakeout. It tried to break out and failed. Then we have a closing wide range bar under major support. Now we have an inside bar. Now we have another all the way back down. So this is a 3-bar bearish reversal in a downtrend now. I have declining 20, declining 50. It broke support. Here is another closing new breakdown with a price void. Look to the left. Now here's my inside bar that I just showed you. Here's my second inside bar that took out the high of the prior bar. Remember, the entry is under the low of the 3 now, or the low of the 2, however many inside bars you have. But this green bar being ignored and now triggering our 1-2-3 continuation, that's why I call it a bearish 1-2-3-4. That's our trigger. Under the lows, then we simply manage in between. This is a closed trade, but this is in we track every single open and closed trade in the members area for our subscribers to see. So this is the format of the closed trades, shows you where we shorted it. We always give the technical setup. It's right here. Bearish 1-2-3 continuation breakdown at the 50 MA right there, the 20 MA. After an upside shakeout, I just described that there, and a breakdown on the weekly. I'll show you that on the next slide. Then we're in trade management mode. We got out in 3 different lots into weakness. And in the 4 days that we held this thing, we booked a beautiful 16% return on capital with very easy management. So it's getting down here now to the major support. That's when we just went into tighter trail mode. So this is the weekly chart now. We have a weekly breakdown and a bearish downtrend. So this arrow where I'm pointing to was the initial closing breakdown, and we traded under the low of that on the daily chart, which was the bearish 1-2-3. And you can see nasty downtrend, declining 20 period moving average. green bars ignored, shallow retracements. And we say here the reason we like multiple time frame alignment is the odds of follow through on the pattern that you're trading is in alignment. So whatever time frame we're trading, we go up one time frame and we make sure that the bias doesn't have to be the same pattern, of course, but the bias supports the bias that you're trading on the smaller time frame, and EXAS did it with flying colors. Come check us out, folks, in our green trading room. My partner Greg Capper and I, we start at 9 a.m. with pre-market review, our bias, we review trades, open positions, our strategy for not only the day but for the week, for swing trading. Spend $7 and you will see us apply the Master Trader approach in real time. We're scanning, it's ongoing education every single day. It's a marvelous place to get to know us better. Go to mastertrader.com/green trial. Hope you enjoyed that. Any questions, as always, email Greg or me, and look forward to seeing you in the next trade review video.